Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar. Steve Miley on the call here for trade day on Monday, the 13th of November. Welcome, everyone. Welcome. We're going to go through our usual regular run through here today. What's going on in the financial markets from a macroeconomic, fundamental, geopolitical, central bank data perspective. I just want to run through a couple of features at the start in here that we've got added to the site. So we'll run through those as well. Not going to go into too much depth on the charts. Don't usually do that on Monday because Monday I try and take a look at what I like to call the shape of the week. Okay, so we'll take a look at the shape of the week in here, what we've got coming up in here for the week. So we'll be doing that as we go through today, and we'll dip into the chart reports without going into detail and examining the charts in any kind of detail. So the first thing, so just you guys are watching live. So for those of you watching live, if you go to the trading room, you'll see where you are. If you scroll down, so below where you are, there's where the reports are. So where you normally get these reports. I don't really want to. Well, I might go there, but I'm going to get feedback from myself, which is annoying. But maybe I'll just go there anyway. So in the trading room here, it's just going to load it up. So we're going to get the feedback. But down here, so you're watching in here, it's here. Okay, so you got the technical analysis levels, the fundamental analysis reports, and then the live squawk daily briefing. This is what's been added in new. We have the European briefing, the US briefing, and the closing wrap. I don't know why I'm not streaming live. I can't hear myself there. But there you go. Oh, it's good. I can't hear myself. I think I might have muted myself out at this end. So so we've got these new reports in here from Live Squawk. So Live Squawk, if you use the Squawk service, you can come into the Squawk service here. If you don't use a Squawk service, please do start using it. We've got this live market commentary from Live Squawk. Click here, click to start the audio, and you can listen to Live Squawk's commentary. But over here, we have the Live Squawk daily briefing we've added in now. So this is an extra set of reports, and I'll just show you those quickly in here. We have the European briefing. So basically, this is what's happened, since, overnight, or really from over the weekend. It's not just on the normal commentary, but they also have in here links to articles. Not links to. They have their articles here that are of interest, right? So they're kind of doing a précis for you, really. So and then they say, see what data we've had, and look at the data, and then there's also some other stuff in here on European central banks and government, FX, crypto, fixed. I mean, it's a really good resource in here, and just got links away. Yes, there are links away to other resources, right? But it's basically bringing it all together for you, and then just at the top in here, just giving you a quick commentary on what's important. Okay, so it's a really good resource. So they've got the European briefing, then there's the US briefing. Okay, so this is for today. What's happened in the European session in here? Looking at the ZEW in here, the ZEW data. Moody's tail risk is Italy on edge. So a critical rating call coming up on Italy, and then again look the various links in here, and then they also had, this will be from Friday, and you'll get this at the end of the day today. They have their closing wrap. I'm not quite sure what time they put this out. I think it's might be the end of the European day. I'll have to double check that for you, but just come back and have a look. And so these are all updated daily, obviously, and then you've got a wrap up of what's happened the previous day. So this is a closing wrap from Friday, obviously, because we haven't got through. So please do take a look at that. So it's in here on the left right hand side. So we have our normal technical analysis reports from Market Chartist, which is me. We have the fundamental analysis reports, which I write, which we have the macro matters and the weekly recap I put out every weekend. Usually goes out on a Sunday. You can check those out. And now we've got these new Live Squawk daily briefings. So this is an addition to what we usually provide for you, all this other stuff. So it's another resource for you guys. And don't forget, if you haven't been using the Squawk, do try out the Squawk. It's just above here. Just click on the audio here, click to start the audio, and you'll get the Squawk. Okay, so looking at I'm going to start going through now. So we also obviously do the macro matters. So this is the more in-depth. I'm not going to go through this, right? So this is the more in-depth look at what's happened in the markets. It's a recap of what's happened, and then an outlook into what we've got coming up. But then we also have the summary of that, which is in here, the weekly recap and update that I post as well. So you can get that again. That's back in here in this middle section in here, fundamental analysis reports. There's the macro matters I posted yesterday, and there's the weekly recap and update posted yesterday as well. So let's run through that weekly recap and update. So really the focus last week, the three things we had going on last week, well, one was stocks did really, really well. We had an 8-day winning streak on the S&P and NASDAQ. For the S&P, that matched the best we've had in the last 20 years. If it had gone to 9 days, we failed on Thursday because when Powell spoke, and I'll talk about that in a minute, but if it had gone to 9 days, that would have been the best the biggest winning streak that the S&P had had for over 2 decades, right? So since the early part of the century. So that would have been really significant, but nevertheless, it will still match the best winning days consecutive winning days that we've had for 2 decades. The Treasury auctions from last Thursday went Treasury auctions from last week went fairly well, and that was a positive. The Thursday's 30-year auction wasn't quite so well, and alongside those slightly hawkish comments from Powell. That was the other thing we had on Thursday. The comments from Powell when he was speaking at there was an IMF conference, was slightly more hawkish, saying we will hike further if we need to. There's no chance of any cuts anytime soon. So that wobbled market. So we went to slightly higher yields, higher yield, lower prices on bonds, and then lower prices on stocks. So that popped that 8-day winning streak in here. Looking into this week, it's very quiet on the central bank side. We do have the US Fed speakers in focus. One thing I did miss, and I'll talk about shortly, is that Biden and Xi Jinping of China are meeting this week on Wednesday in San Francisco, I believe. I kind of missed that. So that I didn't put that in here. That should be in here as well. That could be important, okay? Basically obviously you don't have a summit and come out of it with bad news, but the market's not really expecting too much from that summit. But if they deliver anything kind of positive, and they don't go, and let's be clear in here, they do not have these summits unless they're going to come away with something, right? They're obviously not that stupid, right? So they don't go and do these summits and have them fail, right? Xi Jinping is visiting the US. He's in San Francisco. So this should give some kind of positive outcome. What that positive outcome is, obviously, we don't know. There's an article on it. I'll share the article shortly. Talking about hopes, definitely hopes on trade. That's going to be a definite one. There might be some coming together on the situation with Russia. Who knows, right? Who knows what we're going to get? Okay, but I think it's important to say that that wasn't on the calendar. I didn't have that on the calendar. That's going to be an important thing to watch from Wednesday onwards, probably end of day Wednesday into Thursday, something like that. Okay. On the central bank side, quiet though, but we do have Fed speakers. We're watching those Fed speakers. We're getting all sorts of different tones out of Fed speakers at the moment. Some are shifting slightly more dovish, some are staying very, very hawkish. So we're going to have to watch out for those Fed speakers as we run into the next meeting, which we have, which is in December. An important week for the big data of the week is CPI from the US. That's on Tuesday. We've got nothing really of note going into today. But the big data of the week is Tuesday's CPI data. Okay, that's the one we're going to be really watching out for this week. But you also get CPI from the UK on Wednesday and from the EU on Friday. So we're definitely going to be watching all of those as well to see what the global situation is. Obviously, the US is very much a focus and it comes first. We're getting that on Tuesday. But those other CPI data, we're going to be watching out for those. We also get employment reports from the UK and the EU on Tuesday and from Australia on Thursday. And then we also get US retail sales. That's the other big piece from the US on Wednesday. So US retail sales, and that summit between Xi Jinping and Joe Biden is on Wednesday. The other thing, even though I've kind of come off the earnings watch in here, we haven't been looking at earnings. It kind of got all the big tech was out of the way. We didn't really watch earnings last week. We had Disney last week. But one thing to note in here, so at the very end of the earnings season, you do get some of the retail giants, right? So we are right at the end. Most of the big companies have all reported, but we get the retail giants from the US reporting. So what we do get is on Tuesday, we get Home Depot. On Wednesday, we get Target. and then on Thursday we get Walmart. Okay, so we're going to be watching out for those. Okay, to show some kind of sense of how much is the economy slowing down? Is the consumer still strong? Is retail still strong? So we'll certainly be watching those as we go through the week. Home Depot Tuesday, Target Wednesday, Walmart on Thursday. So those are the key things to be watching out for this week. But the big one is really the all-important CPI data release from the US on Tuesday, and then maybe those retail sales data out of the US on Wednesday, plus the UK and the EU CPI data out Wednesday, Friday. Okay, so that's what we've got coming up going into this week. And quickly, I'm going to just jump to the calendar in here, and you can see in here nothing really of any kind of note in here coming out today. It's all very, very, very quiet. These are just OPEC monthly report, not interesting really. These are CFTC releases, so they're not really significant. They're not actually data releases, so nothing really significant coming out through today. And then there's those earnings report. If I go for this week in here, we have Home Depot Tuesday, Target Wednesday, and Walmart on Thursday. So we're watching out for all of those. Just to go and jump into my, so these are those reports. So just go into the, where are we? Reload. The market reports into the technical analysis reports. So we did get that blip kind of slightly down in here. So there's the bond market in here with the blip back down in here. And we spoke about this on Friday. Bonds sold off on Thursday, but equities really hanging well. And bonds just stabilized. They didn't go back up again. You see a 30-year sold off on Thursday, okay, and then didn't really rebound. Just marked time was kind of sideways in here on Friday. And then the same in here. We look at the 10-year note actually went lower in price, still lower in price. We go in here to the 5-year note, went lower in price. Okay, so lower in price is higher in yields. And the 2-year note, lower in price, higher in yields. This was because of concerns from what Powell had said. So we went to higher yields, and we can see that if I go and jump to the yield chart in here. Oops, wrong one. Here we go. And I pop out the yield chart. You can see we crept higher. There was the push higher back on Thursday, and we crept higher into the end of the week. This is the 10-year note, right? Crept higher in yields. So yields went higher into Friday. But what was really impressive, if I go and find the right page in here, is stocks in here rebounded and went to new highs. Yeah. So despite yields continue to go higher, they wobbled a little bit on Thursday. We went down on Thursday. We broke that 8-day winning streak. But on Friday, boom, we leapt higher. Look at the S&P playing with this downtrend line that comes all the way down in here from late July. Okay. The NASDAQ in here is already up through that trend line. We broke that last week. Back lower, and then a really super strong day for the NASDAQ. Took out that swing high from October. Okay, so through that October high in here, the S&P 500 is getting, it's actually just took out the high there, only just got through that high as well. Just got through that high there as well back on Friday. So a more resilient, a more bullish tone, despite the fact that bonds didn't go actually back to higher prices, lower yields. They actually went, if anything, to lower prices, higher yields. So we're getting this this split, right, guys? We're getting this this kind of dislocation. Before, we very much had higher bond prices, lower yields equals higher stock prices. Now, even though bonds are going now back to higher yields, lower prices, higher yields, stocks are still being very resilient and very positive. So there's this underlying bullishness, and I have to go say, there's no reason for me going into the day to not be bullish in here on stocks going into today. We've already looked at the calendar, we looked at the earnings. So 5 things to say. You're talking about bullishness going into the end of the year. We've got these big divergent battle of the banks. I got it in here. Goldman Sachs and Morgan Stanley diverge on their Fed outlook in here, and there's a separate article in here on this. So if we take a look here, Goldman Sachs, Morgan Stanley diverge on a Fed rate cut focus. Morgan Stanley sees 300 basis points of rate reductions. That's going into next year. Goldman Sachs forecasts rates to fall by 1.75. So looking for far more aggressive rate cuts coming in here from Morgan Stanley. And then also on that note in here, Morgan Stanley, I think, going for quite a bullishness to next year. I think I've got an article on that. Yeah, Morgan Stanley sees the S&P ending 2024 next year at 4,500. So a bullish tone in there certainly for the S&P 500 from Morgan Stanley, given we're currently at, like 40, where were we, 44.30. Actually, that's not that bullish, is it? Not particularly bullish up from here. No, it's fairly lackluster, actually. Thought it was a more bullish tone the way they were shouting about it. 2% upside from current levels. Yeah, oh, not particularly bullish then. I think they're more bullish. I said 7%. Oh yeah, they do. They are looking for a more bullish. Their view is up and then back down again, basically. Up and then back down again, and then a much more bullish jump in it going into 2025. Okay. So yeah, going into this morning, US futures slightly lower before we come into the key inflation data, and we've got this Biden Z summit very much in focus in here, and there's an article on that as well. Everything Biden and Z need from their summit, starting with each other. Okay, so this is important to both sides in here. You know, Z is under some pressure at home. The economy is doing bad. Obviously, the economy has previously been doing it's been strong for the last 20 years, not doing particularly well at the moment. So it'll be interesting to see what comes of that and see if they can get the global economy moving again in here. What else do I have for you in here? Just a quick recap on the overnights, really. So Nikkei was fairly flat overnight, but the Hang Seng played catch up with the US and was up 1.3%. European averages are up, playing catch up, remember, though, with the US from Friday's strong rally. And then we go and take a look at the US. Then we had that really strong rally on Friday, up 1% on the Dow and more than that on the S&P and the Nasdaq. We are slightly lower in here this morning, not a huge amount though. 0.2 on the S&P, about a tenth on the Dow, and 0.25% here on the Nasdaq. But overall, underlying, we'll see a bullishness to stocks. I'm not going to go through all the charts in here today, but I'll just quickly have a really dip into here. But there's no reason. All I've got in here is after that look. That strong session on Friday, we had a slight dip and we're rebounding already in here this morning on NASDAQ. And then go and take a look at the the S&P as well. Same thing, that strong rally Friday. We did dip back lower, but rebounding already. For me, it's just bullish. I can't really say much more than that. So a question from, I don't know who that is, Zero, whoever you are, Zero, what is the symbol for XLF on TraderBait? I'm not sure what XLF is, if I'm really honest. I've been doing this for 30 years and I don't know what XLF is. Can you send a ticket? support@tradeday.com, please. Send it in as a ticket, okay? And we'll look into it for you. support@tradeday.com. Send us a ticket and we'll look at that for you. But I'm not sure, I've been doing this a really long time. I don't know what XLF is. Okay then, guys, I'm going to wrap it up there, but I'm pretty sure it's something you can't trade with us Trade Day anyway, because I know what we can trade at Trade Day. So okay, I'm going to wrap it up there, guys. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you with another bull versus bear webinar tomorrow. Bye.